What things should you consider before you invest in the stock market? Okay, well, that's a really important question. In fact, many people back away from investing in the stock market because they're not sure what factors to really consider. The first thing that you need to consider is your time horizon. Are you an investor for the short term, or are you an investor for the longer term? It's actually really, really important, because if you're an investor, perhaps as an older person and looking to create income or a longer term investment, then you should be looking at stock that are producing dividends and producing longer term growth. On the other hand, if you're a younger individual and you're thinking, I actually want to make some money over the next 2 or 3 years, then you're going to be looking at stock in a totally different way. You're going to be looking at what the current trends are. You're going to be looking perhaps to see the growth stock and where you can potentially gain from industries and trends that are happening in the market. Of course, you should listen to my talk show and listen to my YouTube, because then you'll get ideas on what's happening in the market right now. So the first thing to consider is, what time horizon are you really happy with as an investor? You also need to think how your attitude towards risk is. Are you the sort of person that doesn't mind if stocks are volatile? Growth stock in particular tend to be more volatile. They don't go up in a straight line. Many people have seen deVere, and it's produced massive returns, over 200% in the last 12 months. And you think, wow, that's going to happen again in the next 12. Well, it's possible, because this AI trend is going to continue. However, sometimes there's a sell-off in a day, and it might be a 5% negative. So are you prepared for volatility? If you're investing in growth stock, just realize when you invest in growth stock, then yes, there's opportunities, but it's going to be more volatile. In other words, the market can go up very quickly, but it can also go down quickly. If you're a longer term investor, then quality stock and diversify. You might want some money in the AI stock like Nvidia or perhaps Microsoft that's gaining, but you'd want to diversify. That can slow your returns down, but it means you get less volatility. It means you get a steady return. I would always suggest you talk to a financial advisor. Why? They can talk to you and they can analyze your current situation, your attitude towards risk and your term, and they can help you perhaps go into a fund. Why would you invest in an investment fund, you may ask? There's charges. Well, yes, there is. But you don't then have to worry about the stock market. You can actually be getting on with, if I can call it, your day job. You can leave the managing of the money to somebody else. You may pay 1% per annum, but at least you don't have to be concerned about it. If you're an individual investor, on the other hand, as I've already said, you're looking at growth or you're looking at returns. Then if you want to do the decision yourself, again, once we've gone to growth or longer term, then you can then look at other factors. What are the factors? I've mentioned trends. I'd also look at what are the profitability of the company. Is it really profitable? And is that profitability sustainable? Lastly, I'd look at competition. Warren Buffett, the most famous investor in the world, the most successful, worth over 100 billion, he looks for companies that have got what he calls a moat. A moat is a company that's difficult to compete with. Take Microsoft as an example. It's difficult to compete with Microsoft. They got such a big share of the market. So therefore, you know that if it's a company like that, they're less susceptible to competition. So when you're investing, you're looking for opportunities, you're looking for good quality, long-term returns, and generally, you're looking for a moat. You're looking for a company in a unique position in a trending up industry, and that's the most important factors to look at when you're investing money.